Good morning, Tuesday the 6th. I have to haul ass this morning, head up to North Scottsdale, speaking at an event in just a few hours. Got, I think, close to an hour on stage talking about this kind of stuff. Interest rates, what's going on in the market, how interest rates are being affected, what we believe is going to be going on in the near future, and the fact that is now a good time to buy real estate. You guys know where I stand. Guys, we've been over the numbers 100 times. I should probably go over it again. When you talk about buying a property, when you're leveraging it and you have somebody else paying off the what you would call debt. It's not debt, that's an asset. If you did your job buying a property, you can keep reasonably rented for the entire time you own it and you can raise rents on it. Somebody pays that off. Just them paying off the note alone on a 20% down. Take the number of the loan amount. Take that loan amount you're going to get, that 80% loan, divide that by 30. That's how many years it's going to take them to pay it off. And you'll then take that number, let's say it's a $200,000 purchase price. You're going to finance $160,000. Divide 160,000 by 30. You can find it's $5,333.33 per year. Divide that into your investment. Let's say it's 20% down, which is 40,000. Let's say there's 10,000 in cost. You're going to find it's over a 10% return on your investment. You're getting 10% increase year over year on that initial investment. That's going up by that much. Now, let's say you're buying in a market that has decent appreciation, 2.5%. You bought a $200,000 house. What's 2.5% of 200,000? Pause this thing. Do the number. You find it's $5,000. You invested 50,000, right? 40,000 down, 10,000 in total costs. What's that? That $5,000 a year increase? That's 10%. You're over 20% right now. 20% before any freaking cash flow. What kills me right now is everybody's waiting for the rates to go down. They're not going down. I don't know what to tell you. I keep saying it. In fact, amazing thing. I'm going to do this right here. I'm going to share charts because that's what I do, right? Amazing thing. We get people calling us from last week. So people calling us last week saying, hey, I heard rates went down. And they expect it to be like some ridiculous number, like down to the sixes for investment properties. Guys, go to bankrate.com. We'll do that when we're sitting here. I'll show you. But it went down from here. This was the worst point we had seen. In fact, there's been only two other points. This was actually March. It was about the same. Over here was the only time from October 2022 up until November 2022. That month is the only time it's been lower or higher rates than we are right now since 2009. So rates are not going down to the extent you want them to go. They went down from here, which is about maybe 1/8% interest rate from here to here. They put all over the news. Everyone's like, rates went down, rates went down. Well, then when they talk to us, like, well, it sounds like kind of the same rate we were quoting before, because it is. There's not that big of a difference. In fact, right now, I showed you over and over again. We've got this line. I believe we're going to hold this line. We've got the 200-day moving average, which has been our ceiling, which is now across that line. That is my believed ceiling going forward. We bounced up off of here. We've got news that brought it back down. We had yesterday where we were trying to get some steam. OPEC came out and said they're cutting more production. They're cutting more production or sticking to what they were saying as far as cutting production. That's only going to put the cost of oil up, right? It's only going to increase our fuel costs, increase our costs for gas and diesel. If that's what's happening, we're going to have that continued increase. Then we're going to have continued inflation. If we have continued inflation, that's going to push on bonds. Bonds are a long-term instrument, right? The dollar's eroded because of inflation. You're paying back a 30-year instrument with the eroded instrument like the US dollar. So you're paying back less than what you borrowed. Go to my Quit Jerking Off investment tool. If you haven't got it, just go right to your just send us a message, right? Text me if you want, 602-291-3357. Again, 602-291-3357. That's my personal phone. Text me, say, I need the QJO investment tool. Give me your email address, and I will send you all the videos and everything, how to use it, so you can see the time value of money. Interest rates don't matter. Get it now. Quit shopping around. Try to find the cheapest guy, because what you're going to get is somebody cannot help you but to close a loan. When it comes into strategies and building your business, you've got consultants. You've got 20 some odd people on my team that ensure your success. Just quit jerking around on this thing, man. Let's just get together and get this thing done. Quit looking around all over the place and move forward on your objective, which is get your damn financing in place and get these properties now, because it's only going to get harder. It really is. Get it now, get focused now, and you'll continue to be successful in your investment business. That's all I got for you. I'll get back with you guys on Friday.